Singapore's economic performance in 2024 had been one of the best in all of the developed world. Here's a graph on the full-year annual GDP growth of Singapore, data from Statistics Singapore. Here you can see that for 2024, Singapore grew at a rate of over 4.4%, which was a figure that actually beated forecasts and estimates, showcasing how Singapore was thriving despite global economic challenges. But the economic performance of Singapore is much more than just their annual GDP growth. We have to discuss the challenges the country faced, what were the defining industries that helped push the economy upwards, and what the government did for the year. So, let's start all of these by first dissecting and talking about GDP growth. The annual GDP growth only portrays the entire year, so let's take a look at it from a quarterly point of view. Here you can see the GDP growth rate of Singapore by quarter. You can clearly see that the country didn't really grow that high in the first 2 quarters of 2024. Likewise, if you compare it to the data in 2023, the growth for that year was also quite slow. But for the last 2 quarters of Singapore, the country saw stunning growth. So, what led to Singapore's strong economic performance in the last 2 quarters? Well, what we found out is that there was a strong growth in both the construction and manufacturing industry of Singapore. Here's a graph on these 2 key industries and their year-over-year change. Here, you can see that manufacturing actually grew massively in the 3rd quarter of 2024 at over 11.1%. Construction, on the other hand, took the lead for the 4th quarter at 5.9%. These 2 played a significant role in the overall economic performance for those last 2 quarters. What's surprising about this, however, is that while the industrial sector has gone up, retail sales have actually declined or seen slow growth in much of 2024. In case you're not aware of what retail sales are, they are basically the total amount of goods sold by retailers to consumers, serving as a key indicator of consumer spending trends. Retail sales are crucial because they reflect the purchasing power and confidence of consumers, which in turn drives a significant portion of economic activity. However, despite Singapore's overall economic growth in 2024, retail sales struggled, showing either slow growth or an outright decline for several months. As you can see in the graph, for the last 2 months of 2024, there was a decline in retail sales. Likewise, in April and June, there were also declines. Although, overall, there were more months that saw an increase. But of course, retail sales is quite a big topic. So, let's graph out the service-producing industries. Unlike the graph we saw earlier about goods-producing industries like manufacturing, the service-producing industries are much broader and encompass key sectors such as retail, finance, healthcare, tourism, and professional services. Here you can see that the service-producing industries have posted strong growth. Information and communication, finance and insurance, and professional services have seen the strongest growth, befitting Singapore's title as one of the world's financial hubs. Now, beyond retail sales and the strong economic performance done by sector, we also have to talk about the inflation and interest rate environment that Singapore was in. 2024 was a good year as it saw the decline in overall inflation from what the world saw in 2023 and 2022. Here's a graph on Singapore's inflation rate, data from Singapore Statistics. Here you can see that in 2024, there was a decline in inflation from 2023. But while it declined further into the last month of the year, it is actually still above what was seen back in the years prior to the COVID-19 pandemic. Here's a graph on the overall inflation rate of Singapore by year. Here you can see that inflation rate, or even at times, deflation, was quite the norm prior to the COVID-19 pandemic. So, inflation at those levels isn't here yet for Singapore. But here's the good news. Inflation at the current levels of Singapore at around 2%. is actually so much better than when it was at a deflation, or even just very low inflation. Why? Well, because moderate inflation, around 2%, is a sign of a healthy, growing economy. When inflation is too low or turns into deflation, negative inflation, it can signal weak demand, falling wages, and reduced business investments. Now, let's take a look at Singapore's interest rates. Interest rates are an important concept to understand, as they are essential in determining the cost of borrowing and the return on savings. They influence consumer spending, business investments, and overall economic activity. Here you can see in the graph that Singapore's interest rate has stayed relatively up for most of 2023. But as you can see, it has gone down in the late months of 2024. This is a given, as interest rates were pushed up due to the high inflation rate environment of Singapore. But now, as inflation has subsided, we are now seeing a drop in interest rates to ensure that deflation doesn't kick in. Now, let's talk about unemployment. Unemployment is another critical indicator for Singapore in 2024, as it showcases how well the labour market adapted to economic conditions. A strong economy is typically reflected in a low unemployment rate, while rising unemployment could indicate underlying issues such as weak demand for labour, structural shifts in industries, or economic downturns. Here, as you can see in the graph, the unemployment rate had been relatively the same from 2023 to 2024. But this rate of unemployment is quite normal, especially if we compare it to the years prior to the COVID-19 pandemic. Let's graph that out, just to show you how normal the unemployment rate is during the year 2024. Here you can see that the unemployment rate of Singapore was nearly the same as compared to prior years. Finally, before we end the video, we have to discuss the biggest factor that drove Singapore's economic performance for 2024, and that's the government. 2024 was a big year for Singapore because it saw a new Prime Minister known as Lawrence Wong. Wong took office, replacing longtime leader Lee Hsien Loong. But of course, most of the economic performance that affected Singapore in the year 2024 was more likely due to Lee Hsien Loong. And for Wong's policies to take effect, it may take anywhere from 1 to as much as 3 years. Let's try to find out, however, the fiscal policies implemented for the year 2024. Let's graph out the fiscal revenues of Singapore for 2024 and their expenditures. Here on the graph we have two charts. On the left are the revenues, which are basically how Singapore made money for 2024. On the right, we have the expenditures, and it's how Singapore spent money. On revenues, Singapore's government made a lot of money, mostly from corporate income tax, personal income tax, and goods and service tax. But for the year 2024, there is actually an interesting way to view the revenues, and that's the goods and service tax. Let's graph out the increase of goods and service tax trend changes. Here, you can see that the goods and service tax collection have actually increased significantly every single year. The reason being is because of the goods and services tax, GST hike, that was implemented in 2024. The Singaporean government had previously announced a staggered increase in GST rates, with the latest adjustment pushing the tax from 8% to 9% at the start of 2024. This increase directly led to higher GST revenue collection, making it the largest contributor to the government's overall revenue growth for the year. Now, let's talk about expenditures. For the year 2024, Singapore's expenditures are spent on various things like security, economic development, and government administration. But each of these actually have specific sectors to spend on. For instance, if we just take a look at social development, we get to see their spending on things like health, education, and so on. And not surprisingly, The largest here are both for health and education. Likewise, if we were to take a look at economic development, we get to see that a lot of the money goes into transport. Now, one final thing is that we may also have a look at the future projections for 2025. What's in stone for Singapore's economy? Well, let's take a look at it from the GDP growth. For 2025, projections for 2025 aren't actually that high, ranging from 1 to 3%. The reason being is that there may be uncertainty surrounding the US economy, with its trajectory largely dependent on the policies of the incoming administration, which is probably why there is a big range of 1 to 3%. Moreover, it is also noted by Singstat on its GDP forecast that there are risks on trade tensions among major economies, and the potential escalation of geopolitical conflicts could increase production costs and create greater economic policy uncertainty, dampening global trade and investment. So, against these backdrops of external risks, the economic growth rate projected for Singapore is still a mix. But anyway, do let us know what you think. Thanks for watching.